Based on the historical data and forecast, Bitcoin has shown a volatile trend, fluctuating between a support price of $85,400 and a resistance price of $88,700. The RSI indicates that the asset is currently in an oversold condition, with values consistently below 50. Considering the forecast for the next week, the price is expected to remain around $86,000 to $86,500, suggesting a potential for a short-term bounce. The Bollinger Bands also indicate that the price is nearing the lower band, which could signal a potential reversal. Therefore, I recommend a long position entry at $85,800 with a stop loss at $85,400. The initial target price should be set at $86,800, capitalizing on the anticipated short-term bounce. To maximize potential returns and manage risk, I suggest a tiered target approach. After reaching the first target price of $86,800, consider moving the stop loss to break even to protect initial investment. The second target price should be $87,500, and if reached, consider reducing the position size to secure profits. Given the volatility and potential for downward pressure, a conservative approach is warranted. This strategy combines RSI oversold signals, Bollinger Band support, and forecast data to create a balanced risk-reward profile. This strategy is suitable for investors seeking moderate gains with controlled risk exposure. Based on the historical data and forecast, Ethereum has shown a downtrend from December 12, 2025, to January 1, 2026. The price has been fluctuating within a range between $2,790 and $2,990, with the recent price action indicating a potential for further decline. Considering the RSI values consistently below 50, particularly dropping below 40 during the recent period, it suggests the asset is oversold. The forecast data further reinforces this downward trend, predicting prices to remain below $2,900 for the next week. Therefore, I recommend a short selling strategy with an entry price of $2,870, a stop loss price of $2,850, and a target price of $2,820. To enhance the strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band confirms the downtrend. A secondary short selling opportunity arises when the price approaches the upper Bollinger Band, indicating a potential reversal. However, given the current forecast, the primary strategy focuses on the initial short position. If the price unexpectedly rises to $2,840, a secondary short position can be initiated with a stop loss at $2,820 and a target price of $2,810. This combined strategy, leveraging RSI and Bollinger Bands, aims to capitalize on the predicted downward trend while mitigating risks through carefully placed stop loss orders. Based on the historical data and forecast, BNB shows a downtrend. The RSI consistently stays below 50, indicating a bearish momentum, and the forecast predicts a further decline. The support price of $798 provides a key level to watch. Considering the RSI, we will implement a contrarian strategy, looking for opportunities when the RSI approaches the oversold level of 20. We will enter a long position when the RSI falls below 20, specifically when it reaches $19.50. The stop loss will be set slightly below the support level at $790 to protect against a potential breakdown. The initial target price will be the nearest resistance level, $844, offering a potential gain of $54. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band and the RSI is below 20, it signals a potential rebound. We will enter a long position at $806 when the price touches the lower Bollinger Band and the RSI is $19.80. The stop loss will be set just below the lower band at $792, and the target price will be the upper band at $855, aiming for a profit of $49. Combining both strategies, we will prioritize the RSI signal, entering at $806 with a stop loss at $792 and a target price of $855. This portfolio offers a balanced approach, capitalizing on both momentum and volatility indicators for high potential returns. Based on the historical data and forecast, XRP has shown a downtrend, with the price fluctuating between a support of $1.47 and a resistance of $1.93. The RSI consistently remained below 50, indicating a weakening momentum. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential oversold condition. Given this, I propose a contrarian strategy aiming to capitalize on a potential rebound. We will initiate a long position when the RSI falls below 30, specifically at $1.73 on January 1, 2026. A stop loss will be placed just below the lower Bollinger Band at $1.71 to mitigate potential losses if the downtrend continues. Our target price will be set at the resistance level of $1.93, representing a potential 10% gain. To refine this strategy, we can incorporate a layered approach. If the price reaches $1.8, we will take partial profits, securing a 5% gain, and adjust the stop loss to break even. If the price continues to rise, reaching $1.87, we will take another partial profit and move the stop loss to $1.83. This layered approach allows us to capitalize on smaller gains while protecting our capital. The overall portfolio will be 60% allocated to this long strategy, 30% to a conservative short-term trading strategy focusing on the Bollinger Bands, and 10% reserved for opportunistic trades based on unexpected market movements. This diversified approach balances risk and reward, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Solana is exhibiting a downtrend. The price has been consistently falling from $132 to $120 over the past 2 weeks, and the forecast suggests a continued decline to $112. The RSI consistently remains below 50, fluctuating between 33 and 43, indicating weakening momentum. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential for further downside movement. Therefore, I recommend a short position strategy. We will enter a short position at $120, placing a stop loss at $127 to protect against a potential reversal. The initial target price will be $117, aiming to capitalize on the anticipated downtrend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI drops below 30, indicating an oversold condition, we will hold the short position, anticipating a potential bounce. Conversely, if the price touches the lower Bollinger Band, we will tighten the stop loss to $125. If the price reaches $117, we will move the target price to $112, aligning with the forecast. This portfolio combines trend analysis, RSI signals, and Bollinger Bands, providing a robust and adaptable approach to maximize potential returns while managing risk. Based on the historical data and forecast, TRON shows a slight upward trend with periods of consolidation. The RSI consistently dips below 50, indicating a generally oversold condition, but has recently risen above 50, suggesting a potential shift. The Bollinger Bands have been relatively narrow, indicating low volatility, but the price has been fluctuating around the middle band. The forecast data suggests a continued downward pressure, with prices slightly decreasing over the next week. Considering these factors, I recommend a cautious long strategy focusing on short-term gains. Our strategy will involve entering long positions when the RSI falls below 30, targeting a quick profit before the predicted price decline. Specifically, we will enter a long position at $0.271, placing a stop loss at $0.27 to limit potential losses. The initial target price will be $0.278, near the support level, aiming for a modest but achievable gain. If the price breaks above the $0.28 resistance and the RSI rises above 60, we will consider raising the target price to $0.282. This strategy combines RSI-based oversold entries with Bollinger Band and support/resistance level considerations for risk management and profit maximization. Based on the historical data and forecast, Dogecoin shows a downtrend. The price has been fluctuating between a support of $0.106 and a resistance of $0.137. The RSI consistently stays below 50, indicating a weakening momentum, and the forecast predicts further decline. We will implement a short selling strategy when the RSI falls below 30, aiming to capitalize on the downward trend. Specifically, when the RSI reaches 31.7 on December 20, 2025, we will initiate a short position at $0.132. We'll set a stop loss at $0.134, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. Our initial target price will be $0.119, aligning with the forecast for January 1, 2026. To refine the strategy, we will use the Bollinger Bands to manage the position. If the price touches the lower band of $0.12, we will consider closing the position partially and securing profits. Additionally, if the RSI rebounds above 50, indicating a potential trend reversal, we will fully exit the short position. We will also consider scaling out of the position as it approaches the target price of $0.119, taking partial profits to reduce risk. The final portfolio will be 60% short selling strategy, 20% RSI strategy, and 20% Bollinger Band strategy. This blended approach aims to maximize returns while mitigating risks associated with the volatile cryptocurrency market. Based on the historical data and forecast, Cardano shows a clear downtrend. The price has been consistently falling from December 12, 2025, to December 25, 2025, and the forecast predicts further decline. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands are contracting, suggesting decreasing volatility but confirming the downward trend. Therefore, a short selling strategy is recommended. I suggest entering a short position at $0.338 with a stop loss set at $0.344. The initial target price should be $0.315 based on the forecast. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, oversold, it suggests a potential bounce, but in this case, the overall trend is bearish. The Bollinger Bands indicate that the price is approaching the lower band, which could signal a temporary consolidation. Therefore, I recommend adjusting the target price to $0.299, aligning with the forecast's lowest point. If the price reaches $0.315, consider taking partial profits and moving the stop loss to the entry price of $0.338 to protect gains. This strategy aims to capitalize on the prevailing downtrend while managing risk through careful stop loss placement and target price adjustments. Based on the historical data and forecast, Bitcoin Cash shows a mixed trend with periods of consolidation and upward movement. The RSI values fluctuate between 46 and 63, indicating neither strong overbought nor oversold conditions consistently. However, the forecast prices suggest a potential upward movement, starting from $598 and gradually decreasing to $586. Considering the support price of $585 and the resistance of $593, we can implement a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. I recommend a long position when the RSI falls below 50 and the price touches the support level of $585. The entry price should be $585. Set a stop-loss order at $578 to limit potential losses. The initial target price is $593, aligning with the resistance level. To refine the strategy, we will also incorporate Bollinger Bands. If the price breaks above the upper Bollinger Band, consider taking partial profits and adjusting the stop loss to the center of the band. If the price approaches the lower Bollinger Band, wait for a bounce and confirmation before entering a long position. For the forecast period, if the price reaches $598, consider a partial profit-taking strategy. The final portfolio will prioritize the long position at $585 with a stop loss at $578 and a target price of $593, combined with the Bollinger Band strategy for dynamic adjustments. This strategy balances risk and potential reward, aligning with a high returns investment approach. Based on the historical data and forecast, Wrapped Beacon ETH has shown a downtrend from December 12, 2025, to December 25, 2025, with a recent bounce. The RSI indicates oversold conditions, particularly between December 19, 2025, and December 23, 2025, with values below 43. The Bollinger Bands suggest volatility, with prices frequently touching or crossing the upper and lower bands. The forecast for the next week predicts a continuation of the downtrend, with prices potentially reaching $2,990. Therefore, I recommend a short position strategy. The entry price should be $3,120, coinciding with the first day of the forecast. The stop loss should be set at $3,240, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price should be $3,060, aligning with the forecast for December 27, 2025. To refine this strategy, I will incorporate a dynamic target based on the RSI and Bollinger Bands. If the price reaches $3,060 and the RSI falls below 30, indicating oversold conditions, we can adjust the target price to $2,990, coinciding with the lowest forecast price. Conversely, if the price approaches the lower Bollinger Band, around $3,000, and the RSI remains below 30, we can consider tightening the stop loss to $3,030, the support level, to protect profits. This adaptive approach combines the initial forecast with technical indicators to maximize potential returns while managing risk effectively. This portfolio will have the most efficient of the three strategies. Based on the historical data and forecast, Aave demonstrates a downtrend, consistently testing the $148 support level. The RSI consistently remains below 50, frequently dipping into oversold territory below 30, indicating potential for a bounce. The Bollinger Bands show the price fluctuating within a range, with the lower band nearing the $140 mark in the forecast. Therefore, I recommend a contrarian strategy leveraging the oversold conditions. We will initiate a long position when the RSI falls below 35, targeting a move back towards the $155 resistance level. The entry price will be $140, with a stop loss placed just below the support level at $138, and a target price of $155. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band around $140 and the RSI is below 35, it strengthens the buy signal. This combined signal suggests a high probability of a short-term reversal. The portfolio will be 60% based on the RSI strategy, 30% based on the Bollinger Band strategy, and 10% as a safety net. This balanced approach allows us to capitalize on the anticipated bounce while mitigating risk through strategic stop-loss placement. The final position will be a long position at $140, with a stop loss at $138, and a target price of $155. Based on the historical data and forecast, Lido DAO shows a downtrend with decreasing momentum. The RSI consistently hovers between 32 and 42, indicating a neutral to slightly oversold condition. The Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast for the next week predicts further decline, reaching as low as $0.499. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will implement a strategy based on RSI, Bollinger Bands, and support and resistance prices. My strategy involves a short position at $0.543. The stop loss will be placed just above the resistance level at $0.553 to protect against a potential bounce. The initial target price will be the support level of $0.535, aiming for a quick profit. If the price breaks below $0.535, we will adjust the target price to $0.511 based on the forecast data and the lower Bollinger Band. This strategy combines RSI signals, Bollinger Band trends, and support/resistance levels to maximize profit potential while minimizing risk. The RSI is currently around 40, which is not oversold, but the forecast suggests a potential decline, so a short position is warranted with tight stop loss and target prices. Based on the historical data and forecast, Uniswap shows a volatile trend with periods of consolidation and upward momentum. The RSI consistently fluctuates between oversold and overbought levels, indicating potential trading opportunities. The Bollinger Bands also confirm this volatility, with price frequently touching or crossing the upper and lower bands. Considering the support price of $5.78 and the resistance price of $6.26, a combined strategy utilizing RSI and Bollinger Bands is recommended. We will implement a long position strategy when the RSI falls below 35 and the price touches the lower Bollinger Band. Specifically, enter a long position at $5.4, set a stop loss at $4.8, and target a price of $6.26. The portfolio will allocate 60% of the capital to the RSI-based strategy, 30% to the Bollinger Band strategy, and 10% for risk management. For the RSI strategy, we will enter a long position when the RSI falls below 35, and exit when it reaches 80. For the Bollinger Band strategy, we will enter a long position when the price touches the lower band and exit when it touches the upper band. The risk management portion will be used to adjust the position size based on market volatility. This blended approach aims to capitalize on both momentum and mean reversion tendencies, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, SKY shows an overall upward trend. The RSI consistently fluctuates above 50, indicating bullish momentum, with values nearing 70 in the recent days. Considering the forecast data, the price is expected to continue rising, reaching $0.0704. The support price is consistently at $0.06, and the resistance is $0.0694. I propose a long position strategy. Entry price should be $0.0665, with a stop-loss order placed at $0.06. The target price is set at $0.0704. To refine the strategy, we can incorporate the Bollinger Bands. The price has been oscillating within the bands, suggesting a period of consolidation. When the price touches the bottom of the Bollinger Band, it indicates an oversold condition, and when it touches the top of the Bollinger Band, it indicates an overbought condition. Given the current trend and forecast, I would prioritize the RSI and trend-following signals. Therefore, the final portfolio will be a long position with an entry price of $0.0665, a stop-loss price of $0.06, and a target price of $0.0704. This strategy aims to capitalize on the anticipated upward movement of SKY while mitigating risk with a well-defined stop-loss. Based on the historical data and forecast, Algorand shows a downtrend with consistent trading between the support price of $0.112 and the resistance price of $0.115. The RSI consistently remains below 30, indicating oversold conditions. The forecast predicts a continued downtrend, with prices hovering around $0.109 and slightly increasing to $0.111 before falling back to $0.108. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces within the downtrend. My strategy involves entering a long position at $0.109, coinciding with the initial forecast price and the recent low. The stop-loss should be set at $0.107, just below the recent low and the bottom of the Bollinger Bands, to limit potential losses. The target price is $0.113, slightly above the recent resistance and the center of the Bollinger Bands, aiming to capture a short-term bounce. This strategy combines the oversold RSI signal with the support level and the Bollinger Bands to maximize potential gains while minimizing risk. Based on the historical data and forecast, Curve DAO has shown a fluctuating trend, with support around $0.35 and resistance near $0.393. The RSI has been oscillating between oversold and overbought levels, indicating potential for both upward and downward movements. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Considering this, I recommend a strategy that combines elements of trend following and mean reversion. We will initiate a long position when the RSI dips below 35, indicating an oversold condition, and the price touches the support level of $0.35. The entry price will be $0.35. To manage risk, we'll set a stop-loss order at $0.335, just below the bottom of the Bollinger Bands. Our target price will be $0.388, near the recent resistance level and the center of the Bollinger Bands. To enhance the strategy, we'll incorporate the Bollinger Bands for confirmation. If the price breaks above the upper Bollinger Band, we will consider tightening our stop-loss to the middle band. If the forecast data shows a consistent upward trend, we will adjust our target price to $0.393. This combined approach aims to capitalize on short-term price swings while mitigating potential losses. The overall portfolio will be 60% long position in Curve DAO and 40% in cash to maintain flexibility and reduce overall risk. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a robust and adaptable investment approach. Based on the historical data and forecast, World Liberty Financial shows a downtrend with increasing volatility. The RSI consistently stays below 50, with periods of oversold conditions, indicating potential buying opportunities. The Bollinger Bands are widening, suggesting increased price fluctuations. The support price remains stable at $0.137, while the resistance is at $0.165. Considering this, I propose a strategy that combines RSI and Bollinger Bands to capitalize on short-term price swings. My recommended strategy is to buy World Liberty Financial when the RSI falls below 30, oversold, and the price touches the lower Bollinger Band. Specifically, enter a long position at $0.126. Place a stop-loss order slightly below the support price at $0.136 to protect against a potential further decline. Set a target price at the resistance level of $0.165 for a significant profit. The strategy aims to capture the rebound from oversold conditions, utilizing the Bollinger Bands to confirm the potential for a price reversal. This strategy has a high potential for high returns. Based on the historical data and forecast, Bitcoin Cash shows a mixed trend with periods of consolidation and upward movement. The RSI values fluctuate between 46 and 63, indicating neither strong overbought nor oversold conditions consistently. However, the forecast prices suggest a potential upward movement, starting from $598 and gradually decreasing to $586. Considering the support price of $585 and the resistance of $593, we can implement a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. I recommend a long position when the RSI falls below 50 and the price touches the support level of $585. The entry price should be $585. Set a stop-loss order at $578 to limit potential losses. The initial target price is $593, aligning with the resistance level. To refine the strategy, we will also incorporate Bollinger Bands. If the price breaks above the upper Bollinger Band, consider taking partial profits and adjusting the stop-loss to the center of the band. If the price approaches the lower Bollinger Band, wait for a bounce and confirmation before entering a long position. For the forecast period, if the price reaches $598, consider a partial profit-taking strategy. The final portfolio will prioritize the long position at $585 with a stop-loss at $578 and a target price of $593, combined with the Bollinger Band strategy for dynamic adjustments. This strategy balances risk and potential reward, aligning with a high returns investment approach. Based on the historical data and forecast, DoubleZero shows a recent downtrend, bouncing around the support level of $0.109. The RSI fluctuates between 33 and 48, indicating periods of oversold and overbought conditions but generally trending towards the middle. The Bollinger Bands show that the price has been nearing the lower band, suggesting potential for a rebound. Considering this, I propose a moderately aggressive strategy focused on capitalizing on potential short-term upward movements. We will implement a combined RSI and Bollinger Band strategy. The entry price will be $0.109, coinciding with the support level and the lower Bollinger Band. A stop-loss will be placed at $0.0988, just below the bottom of the Bollinger Band, to limit potential losses if the price continues to fall. The initial target price will be $0.112, aligning with the recent resistance level and a conservative estimate based on the forecast. If the price reaches $0.112, we will reevaluate the situation and adjust the stop-loss to break even to protect profits. A secondary target price of $0.12, the previous resistance level, can be considered for a more ambitious return, but it is contingent on the price demonstrating sustained upward momentum. This combined strategy aims to balance risk and reward, leveraging both technical indicators to maximize potential gains while minimizing downside exposure. Based on the historical data and forecast, Maple Finance shows a mixed trend with recent upward momentum. The RSI values indicate periods of oversold and overbought conditions, suggesting potential for price reversals. The Bollinger Bands show the price fluctuating within a defined range, with the recent price approaching the upper band. The support price of $0.317 and the resistance price of $0.369 provide key levels to watch. Considering these factors, I propose a strategy that combines RSI and Bollinger Band signals. I recommend a long position entry at $0.306, coinciding with the forecast price on December 30, 2025, and the RSI nearing the oversold level. Place a stop-loss order at $0.295, slightly below the lower Bollinger Band to protect against unexpected downside movements. Set a target price of $0.346, aligning with the recent resistance level and potential profit-taking zone. This strategy aims to capitalize on the anticipated upward trend while managing risk with defined stop-loss and target levels. The strategy is based on a combination of RSI and Bollinger Band signals, with a focus on short-term price movements,